So some of the volume tools that I want to go through and talk to you about are this thing called a composite volume profile. And a composite volume profile is a volume profile over a longer period of time. Composite just means things put together, and the things are days. So when we put days of volume profiles together or days of data together, we call it a composite or a group of volume profiles, all shown as one profile. And I'm going to show you how to create that today. But that's a composite over over a longer period of time. I've been in some rooms and some places I've heard referred to as microcomposites, and everybody has a different name for it. And we're going to try not to, except for composite and developing or daily volume profile, we're going to try not to focus so much on labeling the volume profile names as making sure you understand what data you want to include in your volume profile for a specific period of time. That's more important than the names. I don't care if you call a composite volume profile a long-term volume profile, whatever makes sense to you. The composite volume profile also shows longer-term volume levels. So volume points of control over a longer period of time, fair and unfair prices over time. And I'm going to show you why those are important for us. It can be a specific range of days to see the high and low volume areas of a specific auction. I'm going to show you an example of that today based on the recent move down in the ES, and identifies unfair highs and unfair lows of the longer time frame participants. Remember, longer time frame participants are typically those that have a lot of money. They are able to move price, and where they see an opportunity and you can trade with them, you're most likely going to win, because trading up against some, Dalton calls it an other time frame participant, a longer time frame participant, those that have more money and can move the market. When you're trading with them, it's not likely that you're going to lose. And so being able to identify what their unfair highs and lows are becomes very important. And this is just one tool. The composite volume profile is one tool in identifying areas of opportunity for trades. The market is every market is incredibly dynamic, and anything can happen. You know, the old saying that the market can stay irrational longer than you can stay solvent is very true. That's why you want to eliminate your bias as much as possible. But this is one tool, the composite volume profile, one tool. We're going to go through others in identifying areas of opportunity for trades. Another one is a shorter term volume profile, and that can be defined in terms of monthly, weekly, daily, and intraday. So for example, if the ES, something happens, the ES comes back down to 1,500, 1,400, 1,300, and that is likely to happen at some point in history, in the future. And when it comes back down to those levels, we're going to have a significant amount of data to work with, data that runs back 10 years. Now, somebody might say, how relevant is 10 years old worth of data? And it's relevant to a point. I'm going to show you how it is relevant to a point. But we always want to use the most current data for our trade, because that represents the current market participants and their beliefs, their convictions, their where they don't want to trade, their fair prices, et cetera, et cetera. But we use longer term profiles as reference points to say, okay, historically, this is an area, some people may call it support, resistance, whatever. This is an area where buyers see an opportunity. If in the current market, we're going to identify it in the current market, it shows an opportunity as well, then we can act on that. But they become very strong confluence factors for trade opportunities. The one thing you want to make sure that you include in a volume profile is at least the last swing high and the last swing low, or the last swing high and low. And let me show you what I'm talking about with that. So I showed you yesterday how to build a volume profile. Hang on a second. My system is really slow. It's coming over. All right, so here is a structure chart, and this structure chart is back all the way into the beginning of June. So it's 90 days of data. And let's move this over. And look at what we might do. So if we were trading back here at the beginning of July, July 9th, and this was our market, right? Everything was kind of moving up. And we're going to draw a volume profile. We'd want to draw it from this level right here. Right? You can see resistance turns into support. We want to draw it and include this data and all the way up to where we might be, right there. So what we have is a little bit of a swing low, swing high, a pullback. I wouldn't even call this a swing low. A pullback, another move higher, another pullback. And we'd want to identify our low volume areas, our high volume areas, et cetera, et cetera. We want to say, do we have a finish? We're going to talk about these elements today. So a lot of things that we'd want to do with this data. But what this data doesn't really represent, this data doesn't really represent a strong push by sellers. These pullback areas were likely just profit taking. You can see buyers stepping in to support these levels here, push it back up, likely took profit, which is why price comes down, pushed it higher again. So this volume profile up to this point only contains the sentiments of buyers. So what happens when we finally get responsive selling in this market and sellers start to push? It means that some areas like this area at 1964 may not be a low volume area to sellers. In fact, we may see on the way down as the market starts moving lower, this whole area filled in. We may see a whole day of volume filling in this area, maybe 2 days, where we have rotation to give us a better distribution. And we're going to talk about that later. So, but when I talk about having a swing high, swing low, what I really care about, now price, see where price came back down to this level? Right there, you can see that we had a bounce. So historically, this is good evidence of historically where longer term charts can show us interests that occurred before. And what we'd want to see is, is this still an area of interest for buyers? And if so, and if buyers start holding again, and we're going to go through this again today, but I can tell you over the next course of the week or several days, this is where price is coming right here, back to 1953, back to VPOC, because this is the most fair price for buyers. So one of the things that we want to look at is this swing low. We got this low volume area right here. In fact, you can see right here we have a low volume area just for this move up. Now what I want to see is, now I have a swing high and a swing low. So I want to include all of this data. And what you can see in the overlay, the previous one is this darker area, of course. But what you can see in the overlay is, as price starts moving down, I have VPOC up at 1967.25, whereas on the way up, it was at 1953.25. So with this additional data, volume point of control, or the most fair price in this market, has moved up. And that inherently tells me something about price if we start seeing it get through this level right here. Now, I also can see some confluence or agreement as price move lower that this is an unfair high and low. Right here, I'm looking right here. In fact, I can draw this line here. We're going to go through this today, so don't worry. You're going to see this many different times. This is what we're really going to focus on. So if you feel like you may not be getting it right now, do not worry. We're going to go through this a lot. My goal is by the time we're done, you're kind of saying, yeah, I get it. So this is a low volume area, and what I want you to see is what happens to price. First touch, we get some rejection. It breaks through hard. We move up to this low volume area. Rejection comes down. I mean, is this a good trade? It's a great trade. Comes up through that low volume area, comes down, moves back up, finally comes through. Anyway, and we can see as price moves lower, there's an initial bounce off of this level. Another attempt by buyers to push us higher, and once it fell back down through, it was gone. It was done. But after it moved back up yesterday, where did it stop? Where was the high of the day? High of the day yesterday was 37.50. Look at that. I mean, that's to me, that's pretty amazing. Somebody has no audio. Can other people hear me okay? My sound looks to be working. Can you guys hear me? Yep, okay. So go ahead and log out and log back in again. There was a question here. Wouldn't the bottom of that low volume be around 34.75? There is a low volume area here at another one here at 31.25. So I would also, we're going to go through this, so I don't want to get too involved with that. The point of this is to say, once I have a swing high, and then price moved higher and lower, and a swing low, I now have a good reference volume profile that I can, with a little bit more accuracy, start looking at the unfair highs and lows and consider them a little better reference points for potential trades. Now, the other thing, once price moved up above this level that I had, is as price was spending a month or longer up in this area, I had a swing high, swing low, swing high, low. So what that means to me is as I start building this data, say we get up to this date, this starts to become a very important profile, and I want to continue to see how this profile develops over time with these swing highs and swing lows. The longer it stays up in this area, the more valid these levels are. More valid the high volume and low volume areas, meaning the high volume areas are likely to attract price. Once price gets back up into this area, say above 45.25, then we're likely to see price move back to 52.25 and back up to 67.50. Now, I'm not saying it will, because this is an area that it needs to get through right here. But when I have swing high and a swing low, I have good data for my volume profile, because I can now see the interests of the buyers and of the sellers in any given swing. And again, we're going to go through this a couple of different times. So if you don't, if it's a little fuzzy right now, don't worry about it. So last swing high, swing low, I want to make sure I have that. Even if I'm looking at an intraday chart, I want to make sure that I have a profile for a swing high, swing low. If I have a trend day, and we're going to talk about what a trend day looks like in the volume profile, that's okay. because I'm going to use the profile shape for trend day to provide me with levels. All right, short-term profile also shows unfair highs and lows for shorter-term market participants. Remember, don't ever forget this. When you click on buy or sell to get into a trade, that moment of truth, what you care most about at that point in time are the current buyers and sellers. I mean, it's great to draw all these profiles and create the plan and say, here's where I'm looking for buyers to step in, here's where I'm looking for sellers to step in, here's where I'm looking for a continuation on a trend trade. It's great to be able to do all that, but once you click the button, there's that moment of truth. The most important buyers and sellers to you are the ones that are buying and selling right after you get into your trade. And so relative to weight, and people ask me about this because we start talking about different time frame participants, what is the most critical or what do I provide the most weight to relative to my trade? And as I'm planning a trade, I am always working from the outside in, longer term to short term. I am giving more weight to the shorter term levels because that's the most recent levels in interest by buyers and sellers with consideration and reference to longer term. That's why when I have agreement or confluence between the longer term volume profile and a shorter term volume profile, I know I have a really good level. But I always give more weight to the shorter term, meaning the most current. And when I'm into a trade, that's why I watch the print, I give the most weight to what the current buyers and sellers are doing because they are the ones who are going to take me to profit or into loss. So I want to make that really clear. I give the most weight in terms of my trade decision, trade management, to the most current volume profile. So that may be, you know, I'm going to show you as we learn to plan trades and learn to identify the day and how to create trade plans on the fly during a day. I'm going to show you how to take the previous day's activities and then start identifying what the current participants are doing and then building or changing, confirming your trade plan as the day goes on. And again, we're going to go through this a lot of times. Can I define unfair high and low? Jim, yes, I'm going to do that today, and you're going to see that in a presentation today. And as we go through the market structure, the volume profile structure, I want you to hold that question, because if I don't answer that question after I do the presentation on the 7 elements and the attributes of the volume profile, if I don't answer that question, I want you to ask me again, okay? Is that fair? Okay. All right. Thank you. All right. The short-term volume profile, effective for Globex and cash market trading, can be used to profile a specific historic rotation or a profile within a range of days. So here we are in the ES. We're at all-time highs. Someday, something's going to happen. Responsive sellers are going to step in, and this market is going to start to move lower. And we are going to want to make sure that we're able to utilize data from the history of the ES, not to trade against, but to identify potential levels. Doesn't mean that once you identify a level that has historic relevance, it doesn't mean that it's going to be the trade that you want. It's a reference point. And once the market confirms that level, then you have a much stronger potential for a trade. And again, we're going to go through this a lot of times, so don't feel like you need to get all of this right now. But you can use a profile. You can build a profile for any specific time in history in order to see what happened and what the profile, the volume profile, looks like. Where are unfair and fair prices? So the other volume tools that I talked about yesterday, and I want to present, is just a simple, very, very simple 1-minute volume chart. I'm going I'm going to show you why I want to do this. Now, I'm using a very small probe and rotation. And I'm going to create another volume profile. That's our today, this volume profile does not look finished to the downside, I can tell you that. This looks like it has more room to the downside. And don't worry, I'm going to show you what that means. But I'm using a very tight probe and rotation, 6-4, right there. Very, very tight on this chart. And as you can see, as this moved down towards the end of the day yesterday, we went from 36 in terms of this probe down to 28.25. And so with the probe and rotation, in all of this volume, it may be difficult, and here's the volume clusters and the tool that we use to identify where that volume came in. But throughout the day, I want to be able to see, I want the sensitivity of the 6-4 probe and rotation, but I want to understand if and when price is moving based on a big move of line. This thing is not done. Sorry, I'm a trader first, and once I get a chart up, it's all over. I just love to trade. So anyway, so I use this very simple 1 minute chart, and this is simply what it is. It's a ES, it's 1 minute, and all I am looking for, I typically put a little blue line. It's just so easy to do. I put a blue line around 10,000 because 10,000, this is news coming up here. This is any volume spike during the RTH session that I get up at 10,000 or above, and this was almost 30,000 this minute, that causes me to move over to the print, check out the volume cluster analysis, and start watching what happened. So in this example, here's a low volume area right here at 22.75. I can see in the volume cluster we had a neutral auction in this bar, selling coming in, and I can see the selling starting to get real heavy. But the other thing that I see in this market, look at the buy side or the offer side on this. Relative weakness in terms of colors, but look at the numbers. I mean, this 254, 704, 78, 813. It wasn't just that the buyers were weak. They were non-existent. Buyers were non-existent. So all of the volume that came in at this time was volume that came in at the bid. The majority of that volume spike came in at the bid. I can confirm that up here in the volume cluster, but that tool, right, if I'm going through the day, you get into the doldrums of the afternoon and so forth, and all of a sudden you get a volume spike and price moves. The reason I use the 1 minute chart is it's a really small time frame. And so it does a really good job of flagging these areas. The other place that it becomes very handy for me is in the overnight, and especially the pre-market. So I'll start looking at these little 1 minute outliers, and I just use it as a flag. I look at the time, and I go back into the print, and these are the places, when I use the print as a process for understanding context, then these tell me where to go look at the print, look at the volume cluster analysis at this time, and here, and here, and here, and start seeing what happened in the print and what the buyers and sellers were trying to do. So all of this is for me is a warning, kind of a sign. Here's one. If I were trading the Globex market or trading the Euro session, right? We get the open at the Euro session. I would start looking at these volume spikes as in the print as reference points for me to understand context.